Hello everyone, my name is Michael Sweeney and I'm the Marketing Director of AdTech and MarTech at Kinshift. And in today's video, I'm joined by Neeraj Nepal, who is an independent AdTech and MarTech consultant based in APAC, as well as my colleagues Radek Kostetsky, Business Development Director of AdTech and MarTech, and Greg Lukashevitz, Head of Discipline, Business Analysis and Consultancy. And in today's video, we're going to be talking about retail media, but specifically we'll be discussing the three main ways retailers and other companies operating in the commerce industry can build a retail media network and the advantages and disadvantages of each option. So before we get started, Neeraj, I'll start with you. Just spend a few minutes telling us about retail media and how it's evolved. Because I guess for a lot of people, you know, either working in retail or programmatic advertising, it may seem that retail media is a fairly new topic that's only been around for a few years. But in fact, it goes back much further than that. So yeah, just kind of spend a few minutes telling us about a bit about retail media and how it's evolved over the past decade or so.
Great. Thank you, Michael, and thank you to the team at Kinshift for the opportunity to speak about something that is very important and dear to my heart, and in some ways become the future of the internet. And essentially, the idea of retail media networks is not new. It's been occurring now for almost 2 decades, and the leaders in the space have been traditionally retailers and online marketplaces such as eBay or Amazon.com, essentially marketplaces where people are buying goods of some sort. What has changed is that their original business model is making a profit off selling goods. But what is in some ways matured is like, it's not just the act of you sold a good once, is that they're now able, or spent a decade or so building out the technologies to start tracking and keeping a long-term history of what you're buying, what you're browsing, what your life stages are, and how you navigate that, and then making that data available for other advertisers, other retailers to then leverage for their own advertising campaigns. And oftentimes those advertising campaigns appear on the merchant site. So for example, when you're browsing Amazon.com, you'll see sponsored listings or keyword listing ads that kind of match the domain of what you're looking for. And then what you're starting to see as the retailer matures is that oftentimes as you browse the internet, you'll start seeing those the different products that you're looking at follow you around, or you were buying diapers one day and suddenly as you browse the internet, you start getting ads from toy stores, because the toy stores now said, oh, this is someone who might be a new parent. And oftentimes the retail media network trend has definitely increased as there's been changes in privacy and data proliferation. And so what we're seeing is that advertisers are now being more reliant on businesses that have some sort of source of truth of data, and that could be what you're buying and what you're browsing. It could also be your travel bookings. It could go even as more recently as where you're traveling to in terms of in your taxis or your Ubers. All of that, everything you're doing essentially is a data signal that can in some ways be monetized. And what merchants and retailers are starting to learn about is like there's actually an opportunity to run a very profitable business if you're able to get the consent and the scale necessary to reach out to new advertisers and merchants and agencies and say, hey, I know something about someone. What is that value to you? And so what started about 12 years ago with Amazon.com launching their ad business is now probably a $50 to $70 billion global business, with majority of the money still going to Amazon and Amazon advertising. But we are starting to see a new crop of different retailers, from hotels to the Ubers and Grabs of the world, to the pet stores, to gas stations. There's definitely a big domain momentum occurring in this space.
Definitely. Perfect. So yeah, thanks for that, Neeraj. Just have a bit of a side question here for you, something I often kind of think about with retail media. Given its growth and how popular it is at the moment, and you kind of touched on this with your response there about things like the end of third-party cookies and the whole focus on privacy and first-party data. I guess this is kind of maybe a bit of a hypothetical or even a philosophical question, but do you think that if it weren't for things like the whole change in privacy, the end of third-party cookies, etc., do you think that retail media would be as big as it is now? Or do you think that it kind of needed some kind of big catalyst to kind of really drive the growth? Because as you said, retail media has been around since 2012 when Amazon sort of launched their retail media network. Other companies like Walmart, I think even Target, I think in the US, also launched theirs quite a few years ago as well. So do you think that the boom that we're experiencing now with retail media is directly influenced by the changes with third-party cookies and the broader privacy aspects, or do you think it's really retail media's time? Do you think that it's, a lot of kind of brands are seeing the opportunities now?
Like any good politician, I'll say it's a mix of both, and maybe that's the honest truth is, until in some ways Amazon started declaring how much money they were making in Amazon advertising, people didn't realize it's a $40 billion business, a sleeping giant in disguise that took 10 years to get to that maturity. And then that, when people see billions at stake, they are going to emulate. And not all retail media networks have been successful by any means, but there's definitely an increased appetite for data that has some truth behind it. The retailers, or whomever we use retailers as a broad term, know if you're male or female. Oftentimes it's just guessing with cookies. They know what you bought. They know where you live. They know your life. They can probably guess your life stages. So there's definitely a bigger appetite as programmatic matures to get better data. Versus just guessing. So it's a mix of both for sure.
Definitely. Yeah. And I guess for a lot of brands, the best type of data is the one that is about purchase, intent, for example. That's
exactly
super valuable for a lot of brands. So that definitely makes sense as well. So yeah, excellent. All right. Thanks, Neeraj. So I'll also continue with you there. So just tell us about the kind of, I guess, the main ways that retailers and other, commerce companies can build a retail media network, right? Because I guess when we're talking about retail media networks, we're essentially talking about the technology that powers their advertising business, which you touched on before as well. So if a retailer or other company operating in the commerce world wants to build an advertising business and they're looking at the tech side of it, what are the three main options they have to explore?
Right, and it's entering the advertising business with our acronyms and changing technologies is a bit fraught. And if you're a business that's been mainly think about supply chain and shelf space, or ticket bookings and seats, right? This is a new world to break into, right? So oftentimes partnering is one way to enter in, where you partner with a development company to help you develop what you think you need to have a successful retail media network. Or you can say, hey, we understand technology. How hard could it really be to have an ad server, a user interface, role-based access, optimization engines, and try to go and build it yourself? And there's pros and cons. I'm sure we'll get into that later on. Or you can work with a new emerging tech categorization, which is like retail media networks in a box, where you can essentially white label different components. And there's probably a dozen or so different companies around the world, like the Kebbles and Citrus Ads and Criteos and Online Sales and dozens of others that help you get from point A to point B with like some off-the-shelf solutions. Or you can start to make some acquisitions, like we saw with telcos a few years ago, where they would buy DSPs or SSPs and try to get market entry that way. Or even a couple of weeks ago, we saw Walmart start buying Vizio, and then they didn't buy Vizio, a TV manufacturer, because they wanted TVs, that they wanted new places to serve ads because they were running out of space on Walmart.com. So a way to bring their audiences to a different environment where it's a little bit more valuable to pay $100 CPMs versus $2 CPMs. So those are the three ways of essentially building, buying, partnering to launch a business.
Perfect. Excellent. So yeah, let's continue down that road there, and let's kind of look at some of the main advantages and disadvantages of each of those three options you just mentioned. So let's start with the the main advantages of building a retail media network, right? So as you mentioned before about the option of actually building the tech yourself, as you said, either using an in-house engineering team or partnering with an external partner. If you don't have the internal resources to do it. So what are some of the main advantages of building the technology yourself if you're a retailer or company operating in the commerce industry?
Oftentimes it's that perceived idea that, all right, we have the domain expertise and we know how to work out with our internal systems. We can make it privacy centric from design. We can just be an IP for us that we maybe say that we built this from scratch. And then you kind of view it as a initial capital expenditure versus an operational expenditure of over time. So sometimes it is advantageous. Of course, there's challenges, of course, of scaling it. And I'm sure your next question will be like, oh, why wouldn't you do this? And then oftentimes it's very hard to find the right engineering or talent to sell retail media networks. It's very hard to have the domain knowledge to keep up with the latest trends and requirements. And oftentimes finding a more hybrid approach might be better from the start, and then you maybe work with an external provider to have a full solution when you're ready.
Excellent. Perfect. So yeah, let's and then now let's kind of discuss some of the main I guess disadvantages of building a retail media network, either with your internal teams or with a partner as well. So Radek, I'll start with you. What are some of the I guess the main disadvantages of going down this path and building the tech yourself, essentially?
Sure, Mike. Even though the actual IP is always tempting for different companies, because actually, whenever they have a business idea, they could actually develop the system. But also, as Neeraj mentioned, if we have the white label providers like Kavli, Citrusat, or others, here the time to market might be critical. If the company is not so aware, also business-wise, if the actual idea would work for them in the short term, they might decide on the actual white label part, or I don't know, use some part of the components to get to the market as soon as possible, just to test it out. Obviously, knowing the business more and having also a chance to test it out properly in the white label solution, they could consider like building their own. But it requires some level of awareness, So that's why also some of the bigger ones decide to acquire. So I think Walmart acquiring Wizz is a very good example that they just take part of the business just by acquisition. But these are for the big players. For the smaller ones, they need to first be aware of that like business strategy, if it's the right one for them, right? So I think there's also a point about technical debt. I think maybe Greg, what do you think about it, as you're more tech than I am?
I mean, generally, the technology that you own, you need to maintain, and I think that's a big deal for some of the companies, at least. And the technical debt will arise, and especially when we are talking about the fast-growing part of the industry that come up with new features pretty much every day. We are talking about maintaining and extending the platform on the daily basis, and maybe for some companies that's not the best model to put their hard work money in, right?
Definitely. All right, perfect. Thank you, gentlemen. So let's kind of move on to the next, I guess, option that companies have, which is using an existing ad tech platform to power your retail media network, right? And as Neeraj mentioned at the beginning, there's a lot of options that companies have if they wanted to, use something that already exists. So Radek, I'll go back to you. What are some of the, I guess, advantages of this option of using something that already exists to power your advertising business, essentially?
Yeah, sure. I mean, the level of features, components that the third party or white label solution provides is more clear to them. There are certain, obviously, limitation towards what they can actually do. But if also their workflow business, advertising business is not so well yet established, they can adjust the process towards the white label solution, and they can just, using the features that the white label has, just simply do also some compromises between what they would like to achieve in the long run versus what is the critical flow for them. It can be done also in the custom world, but obviously the story is a little easier for them if they're not yet aware how it might work for them. So that's why many vendors are also joining the retail media network business. I've seen a lot of new companies that advertise that they offer some retail media capability. It's always important to look in detail what is beneath it, right? Because some of them offer a very low level of set of functionality. Some of them are much more mature already. But this is an emerging channel, so everyone wants to join the party, right?
A lot of money at stake.
Yeah.
Definitely. Excellent. And Greg, are there any what are some the main disadvantages, I guess, of using something that already exists versus for example, building it yourself?
I mean, there are a couple. We see the trend not only in retail media network, but in the whole industry, to try to go to your own solutions. That's because the owning of the IP, I think it's a big game changer. Just owning a platform, is a gain already. But also having an influence on the roadmap, on the features, on the integrations, on the path of how it will extend. That's pretty big freedom in terms of how the platform is utilized and how it's extended. Ready solutions will never give us that. Like we always rely on the roadmap that was created by the third-party company that has multiple clients, and their business may not necessarily align with our line of how we want to proceed and grow, right? So that's a pretty big thing when it comes to using the third-party platforms. It may be harder also to integrate with an existing stack that you have. You need to have some sort of connection, at least on the reporting level, to be able to make sense of the data that you possess and you generate from the retail media network. So that may be a challenge for some of the companies as well. And I think that the biggest one is this view that building the solution from scratch, let's say, it's way more expensive than using something ready. And that's not necessarily true. It's true, of course, where we are looking at it short term, but the fees and the commissions that those third-party providers are applying on the contract are pretty high when you think about it. And depending on when you want to meet your ROI, that's what you should look like. What you should look for when you're deciding if you want to use something ready or buy or build something from scratch. I guess that the last thing I want to say is it doesn't necessarily must be either or either one of the or the other, right? You can always make a step-by-step approach where you integrate with something ready very quickly, because as Radek mentioned, the time to market is a crucial advantage when it comes to the ready solutions. But you can build the system yourself in the background and just switch at the right time, right? That's one of the strategy that you can imply that you can implement, right?
On the actual fees point, Greg, this is actually something that kept my interest whenever we talk with different retailers or providers on the actual percentage. Whenever I saw like a number around, I don't know, 20-30%, that was at least acceptable, I'd say. But when I saw and we heard even about 80% of the actual margin, or 70%, that's getting quite high, to be honest. Probably someone should even think about if it's feasible to still pay them so much. Maybe they should consider custom build.
Right. Yeah, and I guess having control of your destiny in a gradual manner might be a long-term best practice. But you say year 1, year 2, year 3, you get your learning, you establish your market presence, you hear what the advertisers want, because oftentimes they're going to come to you at a left field with different reporting requirements that you didn't think about, because it's all new for everyone, and they're going to want to know some new insight that requires custom algorithms or custom data storage to do an ETL to extract. But that's where you can start taking control of some parts of your destiny, while like some parts that are commoditized, like UX, it's very hard to get UX wrong. But once you have it right, you don't want to change it too much either. So there's always that balance to consider.
Yeah, absolutely. Yeah, and I guess when companies are considering either building something themselves or continuing to use an existing tool, obviously the considerations that we mentioned before are super important, such as the technical maintenance and upkeep of the software, but certainly the economic factors would certainly play a huge role in it. And I guess in some cases it might not always be transparent in terms of how much a company is paying to use the software, right? Especially when we're kind of talking about ad markup, etc. as well. But certainly even if it's 20%, right? 20% of $10 million is a lot of money, right? And for that amount of money, Yeah, yeah. I work in marketing, so math isn't my strong point. But got a couple of developers on the call here who'd be certainly be able to crunch those numbers in their head faster than I could. But yeah, even 20% of $10 million, right, is certainly a lot of money, and for that amount of money, you could really build something really nice that kind of ticks all the boxes, right? So I guess it is kind of one of the main considerations for companies. And I guess, maybe historically, I guess the option of building it yourself rather than using something that already exists. I guess one of the things that a lot of companies think about is the cost, right? Because you're essentially talking about, in many cases, large costs initially, right? There's a fairly significant capital investment you need to make initially to build the software, right? But over the long run, right, you can essentially save a lot, once you've kind of built it and incorporate everything you need as well. So
yeah,
there's definitely
there is one more point that is very important that it's often missing. You don't have to build a next biggest retail media network ever, right? If you are building something for yourself, you can select a specific functionality, specific features, specific reports, specific data that you want to collect just for your use case. And that's giving a huge flexibility. And this software doesn't really need to always have to be very big and very expensive, right? Of course, if you want to fully fledged, fully featured platform, that's the different case. But yeah, you can start small, definitely, and check all the all the check boxes of things that you need and are useful for you.
And if you look at how these oftentimes come to market, they use a retail media network usually starts off as like a managed service, right? You get an insertion order from an advertiser or brand or an agency, and you run the campaigns and you report back saying this led to XYZ actions or sales or whatever the metrics are. And then as you scale, you start maybe introducing some sort of self-service where people can log in directly and play around with reporting or run their own campaigns. And those are different use cases and different personas accessing your network. And then oftentimes what you'll find is you'll just run out of inventory to sell. And so then you have to find ways to do some things like audience extension or work with partners to leverage your data outside of your retail environment or your booking platform or what have you. So then how do you do that? Like that's a different challenge and different. You're doing match tables, you're doing data, clean rooms, you're adding different components that you have to consider as well.
Yep, definitely. Perfect. All right. So yeah, we've kind of covered the first two options, either building it yourself with either your internal engineering team or partnering with a engineering company, or using something that already exists. But as we mentioned at the beginning, there's also a third option, which is acquiring a business, right? And as you mentioned, Neeraj, this is something that happened. Particularly with telcos going back a few years ago, there were quite a lot of telcos that went down this path of, they wanted to create an advertising business. They wanted to get into ad tech. And the way they did that was through acquisitions, right? I guess this is probably less common for retailers, generally speaking, like especially if we're talking about the core technology to actually power the advertising business, right? I guess this is kind of less common, but as you mentioned before with Walmart's recent acquisition, that's an interesting one because it's not their core advertising product necessarily. It's like something that they can add on top of it as well. Right. So just tell us a little bit about the advantages and disadvantages as well of acquiring companies for the tech.
Right. Well, if you're a company that does off the shelf or like white labeling, maybe that's your exit goal is to eventually get acquired by a retailer. If instead, to the point of instead of be charging you 20, 30, 40%, just buy me out completely and everyone's happy days. The history of ad tech acquisitions generally have not been very positive from telcos. We're talking these $10+ billion of acquisitions that haven't really worked out across the world, whether in Europe or India or in the States with Verizon or AT&T. And so they're just not a good precedents of showing that actually working out. And I think the retailers who are the next generation of ad tech platforms or the super apps, that they've learned that really it's more about their use cases and instead of just buying market entry or acqui-hiring the right engineering talent, because eventually they will leave, or it's not sticky enough for them to stay. And so I think it's a very unlikely option. But you do see some edge cases of Walmart buying Vizio for inventory expansion, or Roku buying DataZoo to get some capabilities. Again, just a way to fast track that. But it's very few and far between. Maybe Criteo one day will be up for sale, and then there's some pressures. But again, it's wait and see at that point.
Yeah, absolutely. And I guess, like, getting back to this kind of telco topic for a second there as well, because as you mentioned, the companies that, acquired these ad tech companies, they didn't, like, the story didn't kind of work out too well, right? They ended up kind of selling a lot of this, a lot of the tech off at a loss, essentially, like lower than what they acquired for a few years earlier. And I often kind of, wonder about this, because I guess if you're a telco or a retailer, right, and if you want to make an acquisition, right, especially of an ad tech company, what you're essentially, and going back to some of the telco examples, there was AT&T that acquired AppNexus. AppNexus was one of the largest advertising technology companies on the planet, right? So that particular situation, they acquired AppNexus, right? I guess, with the goal of being to acquire the technology. But what they also acquired was an existing advertising technology business, right? So I guess with acquisitions, you've got, generally speaking, unless it's like an early stage startup where they all they have is pretty much the tech, right? Maybe not such a large user base, but generally speaking, if you're acquiring a large company, a mature ad tech company, you are paying not only for the tech but also for the existing business. And yeah, exactly, the customer base. And if you have no real interest in the customer base, right, then you're just kind of wasting money, I guess, right? Because, it's a different story if, like, Criteo, as you mentioned before, gets acquired by another ad tech company, right? All the anti-competitive, check marks and stuff aside, whether that actually goes through or not. But if another ad tech company acquires another ad tech company, they not only get the tech, but they also get the user base, which is equally as valuable for them. When it comes to companies like telcos and retailers, they don't necessarily need the user base. That doesn't add as much value as the tech would. So it's kind of like, I kind of see it as like that situation where the acquisition part, you need to essentially have, like, the value needs to be provided across both the tech and also the user base that you're also acquiring as well. If it doesn't, then you could, again, if we're talking about large acquisition figures, right, in the hundreds of millions or billions, you could easily spend that, like, it'll take you for ages to spend that on custom software development, right? I guess so. Yeah, that's another consideration.
And I think what's also kind of interesting occurring is now, like, who are the buyers of the strategies? You're starting to see agencies. So, like, Omnicom just made its biggest purchase ever entering this space in the US. I can't remember how much, but I know it's in the billions. You have Publicis bought Citrus Ads, right, to then in some ways pair it up with their offering with Epsilon. So they have a retail story as well as a MarTech and AdTech story to help them win more business or sell into those existing customer bases. To what you were kind of saying, you're getting both. If you just want the tech, right, there's probably maybe a different way to do it without that huge principal investment.
And also, like, that doesn't guarantee success either. Right. Like, who is able to buy $1 billion worth company, another $1 billion worth company, right? So, assuming that we are talking about huge companies with a huge complex process inside it, they will try to usually adjust this new acquired company to their systems, right? Yeah. Like financial accounting, like management systems, everything that is needs to be kind of put to on the same level. And this process is usually the killer that kills those kind of acquisition and make them unsuccessful pretty much, because it's a very hard and long lasting process to kind of combine two big companies together, right?
Right.
Even if we are talking about the smaller companies, that's even worse, because let's say the small company has a new tech that you want to acquire. You need those people, those specific people that build the tech. And there are a couple of them, right? Usually in the company that are very crucial, and they may leave after the acquisition. And you pretty much are left with, okay, a pretty good piece of software, but like you can't really use it, you can't really extend it without a huge resources put into it. So you're going back like to kind of reinventing the wheel here, right?
And that happened not only
Yeah.
in the retail media network space or like the big ones, but we've seen in even the past some of the acquisitions in the ad tech vendors.
Right.
What was the actual and how they ended up? I mean, people from this like organization came to other organizations, and actually the only thing that has been left was the like legacy tech, which obviously worked and it had its values and also business relationship, but still it required a lot of customization and a lot of work on top of it. But yeah, this is one of the paths that can be taken, right?
Right.
Yeah, definitely. And I guess if you're, like just acquiring a company just for the tech primarily, and you're spending hundreds of millions or billions of dollars on it, then good luck trying to prove ROI on that. That's all I have to say.
It's been tough and fraught so far. So what you see like Walmart doing was they're partnering with $1 billion ad tech company, and they don't like they're working with Trade Desk, right? And they're getting kind of the best of both worlds, where they have a big, very powerful, very successful ad tech company, but they can kind of be a big enough customer where they can influence roadmap, get their own version of it, etc. So it's kind of only a few companies can do that as well.
Yeah,
Definitely.
exactly. It's a very few companies that can have that kind of impact.
Yeah, definitely. But yeah, also like, as we said before as well, there are certain acquisitions that make a lot of sense as well. I guess, as we talked about, it's really the key thing is to think about how the acquisition is going to fit into the overall strategy, and what value you're going to get from the acquisition as well. Like, especially when we're kind of talking about acquiring ad tech companies for the tech only, that kind of generally does make a lot of sense, especially if that company also has an existing user base that isn't going to, propel the company forward or kind of match the strategic goals as well. So I guess that's important to keep in mind, I guess, as well when considering that option as well.
Right. Yeah, and it could just be like the user bases in different countries, and well, if I'm a US retailer only, that's when you start shutting out that Japan operation down or that Singapore-based operation down, because they're not necessary.
Yes. Yeah, exactly. Awesome. All right, guys. So yeah, that's pretty much all the questions I had for today. Is there any other kind of final points, any other comments anyone else would like to make before we finish up?
I just think it's more about, again, just being selective and intelligent in how you approach this. There's enough a 3-year horizon now to start seeing some best practices of how to build for this, how to prepare for the future. If you're on the fence of entering the space, know also that there are many companies that have entered retail media networks and have failed, right? They just couldn't get the traction and advertisers are starting to reach a bit of a fatigue, especially in the US, where they have dozens and dozens and dozens of different platforms they need to log into, and now we're ending up with a new meta layer of DSPs that are like plugging into different retail media networks, right? So we're kind of back where we started with SSPs and having an aggregation layer. So there'll probably be some consolidation as well, but again, like it's like, understand why you're entering the retail media network. Are you investing in it for the long run? Are you able to bring it to market properly with the right sales team, training programs, user interfaces, reporting like ahead of time? Otherwise, it'll just be an experiment and it may not work out well.
Yeah, absolutely. Awesome. Okay, guys. So yeah, thank you very much for your time today. If anyone has any questions about the topics that we've discussed today, feel free to get in contact with us. Head over to kinshift.com or reach out to one of us on LinkedIn. I'll add all the links to our LinkedIn profiles, contact information in the description below as well. And yeah, once again, Neeraj, Radek, Greg, thank you so much for your time today. It was a great discussion, and look forward to doing this again with you all soon, and continuing this topic of retail media. So once again, thank you very much. Thanks everyone for watching, and yeah, we'll chat again soon.
Thank you.
Thank you, guys.
Thanks, Mike.